Welcome back to my daily report market analysis videos with me, Richard Market Analyst at Hantec on Monday 24th of February. Let's look at euro dollar, which looked as though on Friday it finally started to unwind or at least react to the massively oversold positioning on euro dollar. Big strong bull candle added, what was that, around about 50 or so pips to euro dollar on Friday. And it really did look as though that the recovery was starting to take hold. But look at the fact that the RSI is the only real indicator that has seriously responded, given the fact that the market's fallen back again today. RSI crossing above 30 is a very basic buy signal on RSI, but MACD lines haven't really started to improve yet, neither have stochastics, and the fact that the market's rolled over again is a little bit of a concern. However, it is interesting that the market did start to sort of take account of the fact that it was so deeply oversold on RSI, and the fact is that previous times that when the RSI has recovered from that sort of deep oversold positioning, we do start to see a rally. I mean, I could point to this one here back in 2018, where the RSI went back above 13. You did start to see a sizable rally. You could argue this one here as well. It's a move that I think that possibly still has legs in it. I mean, there is this the fact that the euro is actually holding up pretty well, you could argue, given the fact that other forex majors are under serious corrective pressure against the dollar, with the yen aside. And there may still be room for this to recover. So you'd be looking at for sort of how the market responds, I suppose, now to initial support around that 108 big figure area. And if the market starts to trade with a 107 handle again, that's not great. 107.75 is clearly the support, and that sort of built up over a space of around about 3-4 days. So you'd see that anything holding onto that support would be still considered, I suppose, still recovery territory. And you could even argue, given the fact that the support band between 108.10, 108.20 is sort of broadly intact, I think that is still suggesting that the market is, to an extent, still in recovery phase. And you've got the hourly RSI still above 40, hourly MACD still above neutral. So the positive recovery conditions that were in place on Friday that started to see the market unwind are still arguably there. So it's an interesting moment for euro dollar. Can it now start to build on this support and start to continue to rebound, or is it just going to fall over again? That support at 107.75 will clearly be key now, I think. And as I said, you can tighten that to a sort of 108 to 108.20 as a support band. And if the market starts to trade sort of with a 107 handle again, you'd be saying that that is likely to be that the recovery is just sort of faltering it once more. But for now, just hanging on by its fingernails. Back above 108.40. A couple of reaction highs around that point today. That would help improve the situation. But 108.65 is your key resistance. That was an old support, became resistance back on the 14th of Feb, and again resistance on Friday. So that's the resistance you need to get through for recovery to really start to get going. Because if it does, that would constitute a bigger base pattern of around about 90 pips. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.